Hi everyone, my name is Peter Pakulski. Today we'll be building the cash flow statement of a brick factory from scratch. I already prepared all financial model, cash inflows and cash outflows. So today we'll be building the cash flow statement. Cash flow statement is one of the most important parts of your business idea because inside the cash flow statement you are able to see how much financing you need for your business idea, when you need it. You can create different structures for financing of your business idea, so you can see the structure of revenues, expenses. So this is the core where all decisions are made. So you can build simple discounted payback period diagrams. You can't build it without having done the cash flow statement. So cash flow statement is, I suppose, is one of the most important parts of your business idea. It is completely automatic story. You are not able to put manually figures, numbers inside cash flow statements, so to avoid making different mistakes. So you just create the statement, putting there all inflows, outflows, and see the cash balance at the end of the period. So let's start building it. So I'm creating the timeline for the cash flow statement. So, and we are starting with revenues. So we'll be just walking through the model and mapping the revenues. So I'm just scrolling down, search for the green line. So we are close to them. Here they are. So we have 10 types of bricks, and we're putting these green lines into the revenues. I'm summing them up, extrapolating the story to the right. Then I have to add direct costs. So I'm creating the block of expenses called direct expenses. Then I'm going to the top and moving from top to the bottom, searching for direct costs. So here are the inputs. So we're waiting for the red lines with expenses. So these are all components that are used in our production process. They are marked with red. Earlier we did that to find them easily inside the model, to move them to the cash flow statement. So we have 30 components which we use in production process of different types of bricks. For example, clay, different types of clays. Then we also have pellets. We have electricity, expenses, Now I'm creating the totals for direct costs. Then I'm extrapolating this story to the whole of our timeline. So here you can see operating different circles of purchasing different components for production process. Some of them we purchase once in a quarter, some of them once in half a year, some of them have some specific algorithm. So here all the expenses are shown according to the algorithms that we assigned during the modeling process. Then we are moving to payroll. We are moving to payroll. So here it is. I will create totals, then I'll extrapolate it. As you can see, we may have seasonality in payroll because of, for example, inside the top season, we will be working 3 shifts per day. In winter, we will be working, for example, 1 shift a day. So here we can see this seasonality. In payroll, then we're moving to fixed costs. We are moving to fixed expenses. We're searching as usually for this is the payroll. These are fixed expenses. Creating totals. So the next story will be adding taxes. For taxes, will create a small block of inputs. I will do it here. Tax, then here we have the rate, so for example, here will be revenue, revenue tax, profit tax, payroll tax, then asset tax, So these here will have the inputs. They will be marked with specific color. So revenue tax, for example, will be 5%, profit tax, for example, will be 7%, payroll tax will be, for example, 12%, asset tax will be, for example, $3,000 a month. So here I will place all our taxes. Well, first of all, we calculate the revenue tax. We take the revenue, multiply it on the tax rate. Then we will later calculate the profit tax. Then we are moving to the payroll tax. We take payroll multiplied on the rate, freezing the rate. Then asset tax. First of all, we have to find the timeline and see. Yeah, it works. So we will link the profit tax to the moment when we have operating activity. 0 means that we don't have operating activity, and 1 means that we do have operating activity at this moment. So back. So I take the asset tax value per month, monthly value, and multiplied on whether we have or don't have an operating activity. This line. Now I'm creating totals for taxes. Extrapolating the story to the right. Then we calculating the first important block is result from operating activity. So this is the first important block, which shows us how business operates itself without loan payments. So this is net breathing of the business, I would say, because we're just taking the revenues minus direct expenses minus payroll minus fixed expenses minus taxes, and then we create the formula ends. Now, next story, we are moving to the investment activity. So we are to investment stage expenses. Here they are. Creating totals for investment expenses. Then we are moving to the result from investment. activity. So this is the second block. Operating activity, then investment activity. So we are taking with minus this value because expenses investment stage is mostly outflows are mostly outflows. So now we are extrapolating this formula to the right. So here we have our investment expenses. Then we move to the block inside the cash flow statement. It is financing activity. This is equity. Let's say this will be the input, but we will also can automate the story. So these are maybe the inputs. Then we are adding inflow of the loan. Then we are adding payments of principal payments of the loan, and we are adding interest payments. Then we are extrapolating this story to the right, and then we calculate the result from financing activity. It is equity, so your money from your pocket or your investor's money, then plus money of the bank that finances your business idea. Then you pay principal payments for the bank, and you pay interest payments. Now we create the line called cash balance at the beginning of period, and the next line, the last line, is cash balance at the end of the period, and this is the end of the cash flow statement. So here will be 0 in the first month. Then we are taking the result from operating activity plus the result from investment activity plus the result from financing activity plus cash balance at the beginning of the period. Then we are moving to the second month. Press here equals, take this value from here, then extrapolating this formula to the right, and now we are extrapolating this formula to the right. So now we are done with the cash flow statement, and now it's time for us to calculate how much financing we need to start the business, to see how profitable our business idea. So now we can see our business idea for the first time, how profitable it is. what is the payback period, how much financing we need. So this will be the topics of our next videos. So if you find this video valuable, you may give us a like, subscribe, share this video with your friends. Also, you can order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.